Okay, cash flow forecasting. Again, cash flow forecasting, basically, we want to show example of contractors' cash flow. Okay, cash flow uh, in connection with the scheduling. In connection with the scheduling. Okay, first thing first, basic component of project cost. We already mentioned some definition about direct costs associated mostly with man, machine, and material. And then indirect costs basically is overhead costs. And then when you add those things together, this would be the total cost. And then another component is basically profit. So direct costs, material, plant or machineries, and then basically labor, a big component. Most of the time it could be up to 90% of the total construction cost might goes to these three items. And then indirect costs. And most of the things that you see in the preliminary section of the contract, BQ, whatever, that would basically be in the indirect costs. So overhead costs could be many things, including the portion of the headquarters also. And then the rest would be basically all the money that need to manage the project, okay? Including the professional salary would be included in the indirect costs, whereas the workers would be inside the direct costs. So the total cost, when you combine those things together, that would be the total cost. So the total cost, when contractor are given any project, any job, so basically he have to acquire all the machinery, man, and material. Then he had to manage the project. So basically that is what we call contractor liability. And then on top of that, we have profit, okay? So the contract value is the one that the client have to bear. And normally, initially during the tender period, we are going to relate to tender value. But once the winner is awarded a contract, then it basically will turn into contract value. So profit, sometimes we call it contractor markup. Why? Because normally when contractor do the costing, so he will take into account all the direct costs plus the indirect costs, and then on top of that, he will put a percentage, okay? Whatever percentage is a markup. So that's why profit sometimes is known as contractor markup. All right. Um, if we relate the costs, indirect costs and direct costs in terms of the project duration, let's say we can divide into month, daily, whatever, weekly, okay? Let's say from the first month number 1 to until, let's say, 24 months, until the end of the project. So indirect costs normally is being associated as fixed costs. So the daily management of the project, even though they might be up and down, but normally for the academic purposes, we are going to make it is as if it is a fixed cost. It is like we are it is like our house, for instance, yeah, like your expense. Your expense, there is a monthly expenses that is almost fixed. You have to pay the rent or monthly installment of your loan, car, utilities, bill, and almost every month is about that the same. So that is what we call fixed costs. Okay, so when you plot a graph, weekly graph or daily graph or monthly graph, let's assume this is monthly graph. So this is the point that we are going to plot monthly. So this is what we call indirect costs. That looks like a flat kind of line. But whereas the direct costs, because it basically relate to the man, machine, and material, for sure when you just start the project, you are not going to have a lot of activity around, isn't it? The activity is going to be built up. Normally, you start with the site preparation and then substructure work and then superstructure work. When the superstructure work is about to complete, normally you already reach the peak. Then come the finishing, architectural work, etc., etc. Then you are going to see the reduction of the spending. So that's why you have this kind of parabolic curve. Okay, this what we call monthly example of monthly spending. Okay, so monthly spending is start slow and then basically there is a peak when all the structure is there already. Then come into maybe finishing stage. Then at the end of the day, the project completion time. That would be monthly. Remember the word monthly. Okay. Normally in our calculation, we would translate into monthly. That would be the most normal way. Then cumulative costs. So if, for instance, you take the indirect cost graph, which is basically flat, you convert into cumulative. Cumulative meaning to say, the first month value you plus with second month value, the second month value you plus the third month value, etc., etc. Then you are going to see the indirect cost will be a linear graph. Okay, will be a linear graph, a very straight line. But whereas the direct cost, because of the parabolic in nature for the monthly cost, when you translate this parabolic graph into cumulative, you are going to see this kind of graph for the direct cost. And since the direct cost is much, much bigger, maybe around 90%, indirect cost will be around 10%. Perhaps this graph might not be accurate. So indirect cost should be a little bit lower than that, but that's okay. We just want to reflect the cumulative direct cost and then cumulative indirect costs. Then when you add them together, it will be called total cost. And the total cost is the one that basically looks like what we call the S-curve. So the S-curve that we normally refer to in construction industry. So based on this basis, okay, if you take whatever the cost that you spend over a period of time, normally that would be the case in the case of a construction project, because the nature of construction project, we start very slow and then we are going to build up the volume of activity, and then of course most of the spending will be happening at that particular point, and then we are going to see the reduction of activity, subsequently the reduction of costs. Okay, so that is basically the basis of the S-curve, based on initially based on monthly, then we translate into cumulative. So what is this? Determination of the project cost. How to determine project cost for a project? Normally, we will start with the quantity. Okay, so the taking off process. So if you are QS, for instance, you have to do the taking off even during the tender stage, because you need to basically report to the client how much would be the cost roughly based on certain design. So that is always the convention. Whenever the architect and engineer come up with the design or changes of design, there will always changes of cost. So client always wanted to know. Once the client agree, then only you will proceed with the detailing. So there could be many what we call type of project estimating. Even if you do not have the detailed drawing, you can still do the estimating based on certain concept. Okay. If you already have all the detailing, that will be much better. Then you can estimate in a more accurate way. And then you are going to estimate the cost, taking into account everything, including the direct cost and then indirect cost. Then only you will basically get the cost for each activity. But normally for each activity, we are going to associate with the direct cost. Whereas the indirect cost, as I mentioned, it will span throughout the entire duration of the project. That will be associated with the preliminary. Then in order to make it easy, so we can basically divide with how many months of our project. So at the end of the day, we are going to see it is like a fixed cost. And that is the concept. And then preparing realistic project schedule. Okay, project schedule, we already have the overall cost of the project. That will be one thing. But then we are going to split into the activities. When we split into the activities, then only we are going to be able to see what would be the cost in accordance to time scale that we choose. Normally would be monthly, okay, because we want to generate the S-curve. So S-curve is basically cost versus time. If you do not split those things in accordance to the activity, then how exactly are you going to see, or even how are you going to develop the S-curve? It is almost impossible, okay? Distribution. This is an example of the typical S-curve of a project. So previously in our first meeting, we only tell about how to do scheduling based on timing. Then yesterday, we start doing scheduling by inputting the label. But now, let's say we do not show in terms of the machine and the material, the concept will be the same. If you can attach those things to the what we call your schedule, at the end of the day, you are going to see each of the activity should have costs. So activity cannot be done without any cost, unless that kind of activity could be inspection. Yeah, inspection, you need people also, but some the people's salary might be covered by the monthly salary, which is already in the indirect cost. Okay, but most of the time, other activity would basically have a cost. Let's say we already calculated the cost of activity A is 90,000. Okay, let's say we can put one column here, example cost 90K. And then what this statement really mean is how do we distribute the cost? We can distribute the cost pro rate. Pro rate means to say pro rata. For academic purposes, normally we are going to prorate. If the information is not telling you anything, so how are you going to distribute the cost? You assume that the cost will be distributed equally. Okay, so this is an example of how the cost is being distributed equally per month. In the next example, B is 190K. 190K. You notice that the cost is not distributed equally. So we start with 50,000 and there is a peak there and then reduce. It is like the parabolic. This kind of thing is much more realistic. In the real project, the cost is not going to be prorate, because let's say you certain activity 190, you are going to spread according to the real work. Okay, but sometimes the funny thing about about certain activity like mechanical and electrical, for instance. So mechanical and electrical, the sometimes the amount of the material itself is very expensive. The installation could be very fast. So maybe the distribution of the cost might not be what we call in normal parabolic nature, maybe because at the beginning you have to spend a lot more because you need to purchase all kind of things, material, which basically already fabricated, but then you just simply install. The installation part is just very quick. But for normal construction, this could be the scenario. And then C is 220, okay? So in this situation also, the first month, April 120, and then second month. So subsequently, that could be the situation. Okay, once we have this cost distributed over our bar chart or Gantt chart, then we are going to see the costs by being distributed monthly. Okay, now let's focus on the January. So how to get the monthly cost? We already have cost for each item here through the process of assuming we already done our estimating. Okay, then how do we get this value? Well, this value is very easy. You go down the column or time scale. Let's say you focus on January. So you need to look at what is the Gantt chart happening during January that existed during January, which is basically the yellow color there. And how much is the cost? Well, the cost we already distribute, so this is 45,000. And February, look at the yellow in color bar chart that available, meaning to say there are two activities going to take place. Half of the A will be done in February, and then portion of B will be done in February as well. So you add those value, you will get 95. And March, only this portion of the work equivalent to 100. And then April, this portion of the work, if you add all them up, you get 330. And then May is basically you add two activity, 180. And then lastly is basically 100,000. So what you are doing right now is basically, originally, when we calculate the overall cost of the project, we come up with the overall cost, that is fine. But then we can distribute according to activity. And now we are going to distribute according to monthly in order to be able to see our cash flow. Without doing this thing, or even without the scheduling, let's say we do not have the bar chart. How exactly are we going to come up with this value, which is impossible? So that's why the S-curve that we mentioned is going to be used as well in the project monitoring, because in the construction industry worldwide, S-curve is widely used, okay, as indicator to tell people how much financially you have progress or physically you have progress. Okay, now let's go into a little bit more detail based on the same example. Let's say our cost is written there, and each activity is stated there. Okay. First, let's calculate the monthly cost. So the monthly cost is based on this one is basically 45,000. We already calculate before 95, 100,000, and this thing is 330, and then this thing is 180, 100. That will be the monthly cost. And then the next step you need to do is basically cumulative cost. Cumulative. How do you take cumulative? So the cumulative normally I put at the end of the row there, the column there, so that normally our calculation is at the end of the month. That is how we count our cost. At the end of the first month is 45,000, and then plus with at the end of the second month is 95,000, then you get this value. So that is what we call cumulative. So the first month cost, you add up with the second month, then you get this value. Then you add with the third month, you get this value. And then you get 570 plus 180, you get 750. and you plus with 100, you get 850,000. That is what we call cumulative. And if you notice that 850,000 is exactly the same as when you add up all this value from your the cost from each activity. Okay, because you are not doing anything actually. You are just basically distributing the cost according to the Gantt chart. Okay, Gantt chart. And that is as a check. Sometimes when you add up, you might wrongly add up. At the end of the day, you get this 8,050 is not equivalent to this one. So we need to say something is wrong somewhere. Okay, sometimes we know the method, but in terms of adding up or we using calculator, sometimes we wrongly press. That is the issue. Okay, so we already have those value, and you know that based on those value, we can do something. We can plot our, this is what we call time, this is what we call cost, and then we can, this is first month, okay, let's say 1, 2, 3, 4, 1, 2, 3, 4, 5, 6, 5, 6, let's say 6 months. And the first month, the value is 45,000. Let's draw this graph, okay. Let's assume this is 45,000. Second month, this point is 140. This point, third month would be 240. And then the fifth month, 1, 2, 3, the fourth month, sorry. The fourth month would be 570. And then the fifth month would be 750, 750. And then lastly, for sure, this one is 850K. So this is what we call S-curve for financial S-curve, based on the value that we already get from the cumulative. And if you want to translate, instead of using the cost, you want to translate into percentage, it is as simple as you take the one of the value, 45,000 here, divided by 850,000, the total, time 100%. So you will get this value, 5.3. So that is what we call percentage in terms of financial value. Either you want to show in terms of amount or percentage. Perhaps sometimes people, normally for easy references, people just going to associate with percentage. Okay. All right. So that is how the S-curve for financial is being generated based on our Gantt chart, and then based on the amount that we attach to each activity. Okay, next would be this value. This value that we are going to refer is basically based on what we call duration of the activity. Let me erase some of the things first. Okay. Okay, how do we do that? Okay, look at this is like say this is the first month, second month, third month, fourth, fifth, and sixth month. Or even we can put it January, February, whatever. Okay, on the first month, let's say the first month, look at the bar chart available, meaning to say what is the activity going on the first month, okay, or in January. It looks like portion of activity A. And how long is activity A is going to take based on the bar chart? It is equivalent to 1 month. So we write down 1 month in terms of what? In terms of duration span or in terms of work effort. When we talk about physical progress is normally associated with the how long is the activity duration? Sometimes people associate with the work effort, okay? And then second month or February. So February, what could be the activity going on? Portion of A and portion of B. So it looks like from that bar chart, a portion of A will take the whole 1 month, and then portion of B also will take the whole 1 month. So when you add those things up here, which is equivalent to 2 months, 2 months of duration of the work. And then on the third month, look at this bar chart. So it is equivalent to 1 month. And then for the fourth month, 1, 2, 3, 4, equivalent to 4 months. And then for the month of May, for instance, it is 2 months. Here, 2 month work effort. And lastly, June, for instance, 1 month. So that is what we call monthly duration, okay, based on the work that is that we already scheduled. Then the next will be cumulative. In order to draw the S-curve, everything must be done in cumulative value. We do not do in monthly. Monthly is just for the first what we call step there. Then we are going to convert into cumulative. So first month, at the end of the January, then we are going to have 1 month time being spent. And then at the end of February, maybe January, February will be better, because otherwise we are going to confuse with this also one, this also one. What is this thing? Okay. So the top here represent the time duration of the project. Okay, project overall duration in terms of monthly. But the one that I note down here is basically the work effort in order to perform the job that we show in the Gantt chart. So in the second month would be 1 plus 2 equivalent to 3 months work effort. And on the third month would be 3 plus 1 equivalent to 4. On April, for instance, this is April, 4 plus 4 equivalent to 8. And then for May, 8 plus 2 equivalent to 10, 10 plus 1 equivalent to 11. You notice that 11. 11 is the cumulative activity duration, whereas 6 years represent project duration. So there is differences between project duration and then activity duration, because some of the activity are being overlapped, being done by maybe different group. Okay, now we can plot another graph. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5, 6. Let's say this is our S-curve, okay? And the one here is basically based on, if you want to plot now, we can plot according to percentage. Normally, physical progress, we are going to show in terms of percentage. So what could be the percentage here? Percentage here is 1. If you take 1 divided by 11, 11 is the overall activity duration that you need, time 100%, you are going to get this figure, 9.1. Then in February, you are going to have this figure, 27.3. On March, for instance, 36.4. And then on April, you are going to have 70.2.7. And then on the 5th is 90.9. And lastly is 100. For sure, you are going to get 100 on the 6th month. Okay. So that is the example of what we call physical S-curve. So this is what we call the basis. Okay. The basis of the physical and financial S-curve is based on this concept. As simple as that. All right. Okay, now let's take a look at another, perhaps when you have a long list of activity, then only you are going to see the S-curve will basically look very nice. If you do not have the long list of activity, then the S curve doesn't look like S. Okay, sometimes people get confused. It doesn't look like S. Yeah, but if you have a long list of activity, then it basically will take some shape of the S, not exactly the S that we write down. Okay, let's assume another few activities. Okay, cost is there, and so the cost distribution is a prorate. This is an example of prorate. And then every month we are going to take monthly cost, and then we are going to convert into cumulative cost. If we have this cumulative cost, then basically you can plot the graph. You notice that the cumulative cost, when you go until the end, 54,500, for instance, which is equivalent to when you total up the cost for each activity. It should be the same. What you are doing, you are just distributing the cost according to the time scale, for instance, monthly, in order for you to generate so-called S-curve. So you see, it doesn't look like S-curve because the data is not that comprehensive enough. If you have a good data, then basically you are going to see some kind of a curve here a little bit, and that would be a little bit like that. Okay, of course it doesn't look like S-curve. Okay, but that is the concept that people use. Okay, for a very long time. So it is not that whatever it is, S-curve is basically being used as indicator. Okay, as indicator only, so that so that basically people can have something to talk about. Otherwise, it is difficult. If you are handling a project, and then people ask you what could be the progress of the project, instead of explaining about the progress of the project, you have completed this and that and that and that, all long list of the story there. So for simplicity purposes, we just mentioning that, okay, we already reached 20%. If you talk to people who have no idea about your project, for sure, they also do not know 20% is what exactly. But that is not important. The important is that the indicator is meant for the people who basically handling the project. Basically, they do have some ideas. For instance, if you're constructing a 10-story building, perhaps 20% of progress, we should assume that you already completed the substructure work, everything there. Maybe now you are on the maybe perhaps second or third floor. That would be a good indicator. Okay. Project cash flow forecasting. Project cash flow forecasting is the projection of income and then expenses during the life of a project. So the one that we give example is the construction project. It is as if we want to know in the viewpoint of the contractor. Okay. But the concept is you can always use for any project anyway. This is just example. So the income that we refer to, if from the point of view of contractor, is equivalent to payment received from client. So that would be the income to the contractor. Whereas the expense is the cost that contractor have to pay to many parties, man, machine, and material again. Maybe can be divided into subcontractor and then supplier. But again, that is basically related to whatever the cost that contractor have to pay. So the income in this context is basically the payment received or the money received from the client. That is the source of income from the viewpoint of the contractor cash flow, whereas the expense is anything that the contractor spend in order to pay everybody. Okay, why is it important to do the project cash flow forecasting? To ensure adequate cash is available on appropriate time. Meaning to say, when we do scheduling meaning to say we do something which is not there yet. So scheduling do have a forecasting concept inside the scheduling. You forecast something because nobody planned for something which is already there. We normally plan something which is not there yet. That is the concept of planning, thinking ahead of something. So when you think about the timing of the project activity, that is fine because you want to let people know when are you going to start certain activity and then when certain activity is going to end. At the same time, when you attach the cost, then it will basically give you some very good information, okay, about your cash flow. Even though you might not start the project yet, but you already know your cash flow. That is what we call forecasting. When you already know your cash flow, meaning to say how much money you have and how much money that you need to pay people, then basically it basically can help you be prepared in terms of if in one particular month or in a few months during your project period that you will be running short of cash, then how are you going to be prepared? This is the concept. So if you already know, let's say your project is running for 24 months, in the month of September, the first year, you are going to run short of cash with certain amount of money. Then how are you going to top up your account? Okay, how are you going to top up your account? If you have your own money, that will be fine. But even if you have your own money, but normally the money will not be putting in the bank. Sometimes the money are being put in the investment to generate more income or dividend. So you do not want to take out the money uh, as early as possible because you are going to lose on dividend. That is what the accounting system normally looks like. Okay, so the timing must be just nice. And let's say if you do not have your own money, you want to take a loan. So taking a loan also you have to get the right timing because you do not want to take the loan too early or too late. Too early meaning to say you are going to pay more interest than necessary. That is the issue. Okay, and in fact, there are bridging loan for the contractor. You can go to SME banks, so I think almost many banks can give a contractor bridging loan, but the bank is not going to give you just simply like that. The bank will ask you with all kind of necessary information, such as the projected cash flow, because the bank will evaluate your risk. That is the nature of the bank. So everybody who wanted to get a loan, there is a risk profile that bank basically created for you. If that guy is very risky, then the bank might not give the loan. As simple as that. So bank wanted to know your ability. First thing, bank must confirm that the project basically belong to you. It is with all the information. Okay, that would be easy part. And then the second part would be you have to prove to the bank that uh, this could be your financial cash flow, forecasted financial cash flow, and you are going to get the money maybe in the next 2 months, for instance. So the money that you are getting from the bank should be comfortably paid within the projected time. So that is the purpose of having cash flow forecasting. Preparing cash flow data. Okay, first thing first, gathering all information related to cost distribution. It is similar to what we have shown here. This example of we already have the cost for each activity. So that's why sometimes if, for instance, you are taking a lump sum project, the project which basically doesn't have the PQ, you are going to develop your own. So at the end of the day, you are going to have a tentative or estimated cost. So that thing must be there first. So the distribution of cost is being shown similar to this diagram here. Okay, you already have one item ready. Gathering information about payment and expenditure. Payment received from the client, in what way? that would be mentioning in the contract condition. When are you going to get your first payment? Sometimes your first payment you are going to get when you reach 15% of the value of work. You already completed certain amount of work, 15%, then only the first payment will be triggered. And then subsequent payment. Subsequent payment is much easy, but the first one will take some time. And the term normally being put there, maybe you already reached 10% or 15% in order to give the encouragement for the contractor to basically to really start the work. To get the first payment, you really have to show that you are doing the work. Then subsequently, the payment would be much more regular. Okay, that would be one thing. And then second thing is that how regular is the payment? Normally, we would assume that a normal practice, you will basically submit the monthly payment. And then the issue is that when is the client going to pay you? Okay, if the client say that we are going to process your payment within 1 month, okay, actually they are what we call SOP. Even in government also they are SOP, but SOP is SOP. Sometimes the issue is the SOP is fine, but the issue with the human, okay, human that the staff that basically manning the what we call evaluation of the cash flow, and then you need to get the signature of that person and that person. If that person is not around going for holiday, then you have to wait. And sometimes those are the things that we call late payment. Okay, late payment is a big thing, not only in Malaysia, it's a worldwide issue. Okay. All right, so that would be example. So we need to be very clear on what could be the term of payment from the client side. And in terms of the payment, there could be many things. Advance payment. Let's say you are getting advance payment as in the government project. If you are in the private sectors, so sorry, there is no such thing as advance payment. And then how about what we call performance bond? Okay, performance bond is equivalent to how much? Is it 5 or 10%? Couldn't remember. Okay, let's say in government, for instance, you are not able to provide the performance bond because there is no insurance or bank basically want to guarantee you. Okay, then how are you going to start the project? Well, you can start with the guarantee money. Guarantee money meaning to say a certain amount of money will be deducted from your monthly payment until you reach the equivalent of that performance bond. Okay, again, that is example of the term in the payment. So those kind of terms will eventually affect the money that go into your account. You thought that you already done a lot of work, but because of those things, at the end of the day, you are not getting the money as you wish. You will get the money, not immediately, but it will take a long time. Okay. And one more thing about retention fund. Maybe you have heard about retention fund, which is normally equivalent to 5% of the value, okay, will be retained. Meaning to say, whatever amount that you claim, 5% will be deducted and will be put into retention fund, what we call tabung there, that the client will hold the money for the sake of using the money if, for instance, you fail to fulfill the obligation during the defect liability period, but the money basically belong to you and will be returned later on according to whatever term, the contract terms. So this is what I mean, okay? So in terms of payment, sorry.
Question, is it contingency cost? Is it the same?
Bukan contingency cost. Retention fund ni maksudnya certain amount of money, like 5% of the amount will be is it 5 or 10? Okay, so 5% will be deducted from the claim that you basically claim. Let's say you're entitled to claim 100,000. So you are not going to get 100,000. So So 5%
Okay, okay.
will be deducted from that 100,000, maybe 5,000 only kan. 5,000 tu client akan hold. What is the purpose of the money? The purpose of the money is basically, let's say, a contractor already completed the work and hand over to the client, but the defect liability period ataupun kita panggil warranty lah. So when contractor did the construction, completed the construction, warranty tu masih lagi dia kena tanggung. Sekiranya ada crack of the building, whatever. Tapi contractor dah gone case tadi, dia dah balik ke tempat dia mana-mana dah. Itu yang jadi isu. Bila contractor is not there, you want to ask them to repair immediately, itu yang jadi isu. The client can ask other contractor to repair. So the client is not going to pay. Duit yang retention fund tu basically will be used. That is the purpose of retaining some of the money for the sake of covering yang isu macam tu lah. But basically below contractor.
Saya ada soalan sikit.
Yeah.
Apa tu macam warranty tu dalam construction ni biasa dia warranty dia fix ke ataupun ikut tender? Maksudnya warranty dia ada 6 bulan ke setahun ke?
Itu ikut tender lah. In normal construction, kalau kita lihat the nature of warranty ni, defect liability period lah kita panggil lah. Kalau di overseas itu sebenarnya dia mungkin setahun. Setahun tu kerana dia nak go through the whole kita panggil season. Di negara luar tu kan dia ada 4 season. That was the idea lah. Jadi kadang-kadang building tu mungkin okay during summer, but bila winter tu dia start lah. That was the idea. So mungkin kalau projek kecil tu tak adalah akan masa setahun kan. Jadi dia depend. It should be spelled out in the contract document lah.
Okay.
Okay. Then expenditure. Expenditure ni basically contractor spending. Then contractor have to pay to the supplier ke, subcontractor and so forth and so on. But for our cases, for the calculation purposes, for expenditure punya term ni, we just simply assume. Okay, we are not going to split. If you read books, some of the book do give example. They split between manpower, material and machine. When it comes to manpower, the cost that you will incur the cost almost immediately lah. Meaning to say the first month you already have to pay people salary, you cannot hold on. But in the case of some of the material, if for instance you are working with certain supplier and certain supplier give you certain credit, you don't have to pay immediately, isn't it? You can basically have apa tu kita panggil dua bulan ke kredit punya facilities lah. But for our case, whatever cost that we assume, we add all the costs and the cost basically incur immediately. Cuma issue dia with the payment je. Payment we have to look at when the first payment is going to be paid. So most probably you are not going to get payment on the first month of the project. Perhaps not on the second month. The clear case might be you will start with the third month. But whatever it is, in our example, exam question, whatever, we will give the information. Then based on the information, you are the one that basically put the first payment would be occurring on either second month or the third month based on the question given. Step number 3, data analysis which resulted in cash out and cash in. Cash out and cash in, cash out meaning to say which is also equivalent to cost ataupun expenditure. But when you do the calculation later on, we are going to have the net. Maybe when you do in the Excel or whatever table, you could split the calculation into many rows. But then at the end of the day, there is only one net cash out, and then one net cash in. When you have this the final value for cash out and cash in, then only you are going to be able to calculate what we call cash required. So the plotting of the graph is just to show, which is not necessary, but in our case, I'm going to show example of the graph, okay, so that you are able to see what is the ultimate thing that we are going to discover. So at the end of our cash flow calculation here, we are going to get what we call cash requirement. What does cash requirement mean? Cash requirement means to say how much cash does contractor need. In what situation? Well, contractor basically need cash when the cash out, the money that contractor pay to many things is much more than what the cash in, the money is going into the contractor account. That could be the situation. Otherwise, you don't need the cash anyway, because you would basically have excess cash. But in most situations, I would say that contractor will need most of the cash in many months. But our intention is to calculate what we call maximum cash required. What could be the maximum cash required? And in what month this thing will appear? Okay, itu dia punya konsep dia lah. Okay, now let's take a look at the example dulu. Dia punya our ultimate, kita panggil ultimate answer will basically can be shown in this graph, even though the graph is basically just a matter of plotting once you have all the data. So the data is the one that we already mentioned you how to prepare cash flow data. Later on, we can see in terms of this graph. Okay, there are two graphs here. One is what we call step graph. This is what we call step graph. Step graph. So what does this step graph basically reflect or refer to? It basically refers to cash in or equivalent to payment received from the client. Why it is being shown in the step? Okay, so now you have to imagine, let's say this is the first month, second month, and then third month, and then let's say fourth month, fifth month, and then sixth month. Okay, bulan pertama, 2, 3, katakanlah 6 bulan. The project is running for how many months? Okay, maybe 5 ataupun 6. Okay, so the first month, are you going to get money from the client? I don't think so. Because the nature of the construction industry, you must done the job first, then only you submit the claim. Then the claim will be processed. So then it will take another month perhaps. That is the nature. It will not be going to be evaluated, approved very fast. So let's say the first month you are going to get zero money. So that's why the line is basically flat. Okay, maybe I use a highlighter. Okay, highlighter here. Okay, see, the first month basically flat, 0. And the second month, also you don't have any money, flat. So that's why the graph basically flat. And then let's say the first month you already perform some work for sure. Then at the end of the first month, you normally submit claim. Then the claim will be processed for almost a month. At the end of the second month, let's assume at the end of second month, then you will get first payment. Normally in our calculation, we assume the money will be released at the end of the month. That is the concept, always at the end of the month. You notice that at the end of the first month, there is a value here that I mark by basically this. Let me mark here. Ini dia. There is a value. Only one-time payment, and depend on how much. So that's why when you draw a graph, the graph will be suddenly there is a vertical line there, because previously from the first month until second month there is zero, and now you get payment. So that's why there is one line there. And then what would happen between the end of the second month and the end of third month? So there is no money. So that's why the graph basically flat again. Only at the end of third month, let's say you receive the second payment. Remember, every month you will do your job and then you submit claim. Let's say the claim come normally 1 month after you submit the first claim or second claim. So now you are going to get your second payment. So this is your second payment. This is the first payment, second payment, and that's why the graph basically looks like the step. And then similarly, what would happen in between end of the third month and end of the fourth month? Of course, you are not going to receive any money yet. So that's why the money is just flat there until you receive the third basically claim. It is exactly like our salary. If you plot your salary pattern, it will fall under the graph, the step graph, because for most of us getting monthly salary, so the salary is only going to come at the end of the month, isn't it? So now whatever money that you are spending, it is not based on the current salary, it is based on the previous month's salary. So the same concept basically apply in the contracted cash flow. So that's why we do have what we call this step graph that represent money coming in into the contractor account by the mean of payment from the client. Okay, so until the end of until basically contractor completed the project. So when basically contractor will completed the project, okay, the completion of the project is here. This is the completion of the project. We call it practical completion. Why do we extend the graph beyond the practical completion period? Let's say if the project is running for 5 months only. Well, because the payment from the client is going to be delayed, but by 1 month, for instance. That's why we are going to get the third month, the fourth month here, the fourth claim, and then the last claim would be here. Nampak tak? So that's why in calculation we are going to extend the graph a little bit further down, and you notice that from this one to this one, it is basically a few months more. This is what we call defect liability period. You see, as one of you asking me, if for instance defect liability period is 6 months, so meaning to say your final account is only going to be completed here. So being a contractor, actually, if you understand about the concept of cash flow, most of the time you are not going to have extra money. Maybe for the entire project, I would say, if for instance you have the retention fund, and then you have all kind of things related to the what we call payment issue, you are going to get your money most of the time maybe very, very late until encroaching the project liability period. So that's why contractor, when they are engaging into this project or whatever, they need to have a lot of capital. They simply cannot rely on the client payment. Most of the time, that will be the issue. Contractor that, not really contractor, sometimes they, you know lah, Malaysian politics is always like that. Bukannya kontraktor berwibawa pun. Jadi capital pun tak ada, jadi nak buat projek, mengharapkan payment from the client. Cannot. You have to have capital, because from the calculation, we can see most of the time you are not going to have excess of money. Lucky if you have excess of money in a few months, but most of the time would be you are running short of money. Okay, that would be the step graph. Okay, let us complete this graph before we go for a break. And then this graph, cash out. So cash out, it looks like the S-curve because it reflects the cost. Okay, so cash out is always equivalent to the cost that contractor have to pay to everybody, and you notice that the S-curve basically start from the day one, because we assume from the day one you already purchased here and that and whatever things with your own money. So that kind of cost is basically accumulate. And remember one thing, the graph that we draw here is all the cumulative graph. Cumulative graph, huh? Okay. The cost is basically the cumulative cost, and then the expenditure is also the cumulative. That's why you have a step graph there. So let's say on the first month, at the end of the first month, okay, you already spent this much. At the end of the second month, cumulatively, you already spent. So that's why until you already stop work, because you already complete the work, so that is the amount that basically you already spent. And the line will continue, okay? The continue in terms of the mathematics, because the issue is that you do not close your account yet. Only at the end, only after you get your final payment, then only you are going to see. You notice that the difference between this and this is what we call profit. Your profit, perhaps you are going to see, if in this situation, you are going to see around here already. But in some situation, you are not going to see here, maybe very late, okay? Very late and until you reach what we call the final account settlement, then only you're going to see. Okay, what we are going to use this graph to reflect our calculation is this thing, cash required. Okay, cash required, if you look at this graph, the cash out graph is basically this the top graph here, the top graph, okay, and then the step graph is basically the cash in, basically the bottom graph here. And you notice that the differences between this graph and this graph, or I can basically draw a hatchet here. So the hatchet one indicate the contractor is running short of money, because you look at the first month. The first month, contractor already spent this much, but contractor are not getting any money. So that, you see, so from this one, you already understand the concept that the contractor basically require cash. Similarly, in the second month, contractor also require cash, but fortunately, he basically received some money. So the differences between the top value here and the bottom would be not that great, not that great. So if we calculate the cash required for every month, it looks like almost every month the contractor is running short of money, except on the last month, after the 6th month, then only he will see some of the profit going into the account. That would be what we call excess money. If we put into calculation, you are going to see the negative amount of money. That negative amount of money actually reflect excess of money, because our calculation is based on the differences between the cash out and then the cash in. So that is the one that we want to know. Among the month that we calculate, there will be 1 month which basically where the cash requirement would be the biggest. So we wanted to know that value and when is it going to happen. So that would be the question that we normally ask in this cash flow related what we call lecture. Okay, so you already know the question. Always we are going to ask that question, but except that the data is you need to analyze. You already know the concept. Okay, now with the cash requirement issue, you notice that, let's say on the 4th month here, let me erase some of the thing. Cash requirement is being defined by cash requirement is being defined by cash out minus cash in. But the month that we have to refer to, this is the issue. Let's say this is the first month, this is the second month, third month, fourth month. Let's focus on the fourth month. So this is the value of cash out in the fourth month, isn't it? How about the value of cash in from the graph? Are you going to take this? It looks like at the end of the fourth month, you are going to receive the money here. So, but you are not going to take this value. No, if you do that, meaning to say you are going to get the answer, the differences between this point and this point only, which is not much. Whereas contractor has been suffering the whole month while waiting to get the money on the 31st of April, whatever. So which one is much more critical? So that's why the definition of cash requirement, let's say for the month of April, is being defined by cash out in April, in the month of April, end of the month. So end of April, that would be a better way to explain. Minus with cash in March, MRCH. You do not take the cash in end of April because you just simply receive it today. The money that you has been spending so far is basically based on the March payment, the amount of money that you already have in the March. So the definition should be like this. So don't get it wrong. If, for instance, you just subtract cash out in the month of April and then cash in also in the month of April, it will not be correct because you are only taking the differences between this one, which is not that critical compared to just slightly one day before you receive the payment. So which one is more critical? So because our idea is basically to know the cash requirement, and we wanted to know the maximum cash requirement. So among the differences between here and there could be one value which is the highest amount. So that is the thing that we are going to know from this lecture exercise. Okay, so with that, we are going to go for a break. Any questions so far before we go break, 10-minute breaks?
Saya ada soalan.
Okay.
Tadi saya ada beritahu pasal duit retention tu kan, dia akan pegang sampai habis DLP dia. So macam contoh kalau kontraktor tu ada defect dekat site, lepas tu dia kiranya duit retention tu lah digunakan, maksudnya kontraktor akan klien akan bayar balik lah guna duit tu. Ke macam mana?
Bukan. Katakanlah kontraktor tu, katakanlah ada defect, kontraktor tu dah tak duduk dekat site tu lah sebab site tu dah clear semua kan, dah handover. Dia mungkin duduk di KL, projek tu di JB. Jadi kalau misalnya ada list of defect yang orang komplain, pengguna komplain, lepas tu klien bagi tahu pada si kontraktor, jadi katakanlah kontraktor tu turun daripada KL ke JB, jadi dia buat tu kena guna duit dia. Duit kontraktor tu sendiri. Sebab apa? Defect tu memang part of dia punya responsibility. Cuma duit yang disimpan tu nanti, klien tak akan gunalah, tak akan sentuh apa-apa pun. Sebab kontraktor tu dah repair guna duit dia sendiri. Jadi nanti di hujung, katakanlah di hujung final account ke whatever, jadi kontraktor tu akan dapat the whole amount yang retention fund yang klien save tadi. Itu satu senario yang sepatutnya lah. Tetapi macam saya kata tadi, bila dah kontraktor tu duduk di KL, bila katakanlah ada komplain-komplain dia nak turun ke JB ni, mungkin lambat lah kan, sedangkan roof dah rosak. Jadi orang pun dah komplain. Jadi si developer dapatkan kontraktor lain untuk repair. Jadi duit repair tu nak ambil daripada mana? Klien tak akan keluar sebab benda tu sebenarnya responsibility of contractor. Jadi itulah yang akan digunakan duit yang retention fund tersebut. Jadi nanti last sekali whatever balance yang ada, kalau sekiranya masih lagi ada tu, dia akan serahkan pada original contractor tu juga. Sebab duit tu basically belong to the contractor. So So that is the idea of retention fund actually.
Okay,
Alright.
okay. So ada satu lagi soalan.
Yeah.
Okay, macam tadi saya ada terangkan pasal cash out and cash in kan. So kalau contoh cash out dia lebih daripada cash in daripada tender tu, so maksudnya dia akan dapat variation order ke macam mana?
Cash out lebih daripada
Cash in.
bukan, cash out ni maksudnya on monthly basis. Monthly basis tu apa yang dia spend. Apa yang dia spend berbanding apa yang cash in tu maksudnya payment yang dia dapat. Kalau variation order ni ialah kerja tambahan. Kerja tambahan yang daripada original contract. Katakanlah dalam kontrak tu dia tak ada nak buat satu benda tu, tiba-tiba klien arahkan supaya tambah kerja ke whatever. Dan biasanya bila tambah kerja tu, kalau atas arahan klien akan bayar ekstra. Jadi benda tu akan pergi kepada payment lah, dia akan masuk dalam payment kepada kontraktor lah. Jadi payment bulan tu mungkin akan bertambah lah. In term of graph tu dia akan naik sikit lah, mungkin lah kan. Itu contohnya variation order. Jadi persoalan dia kat sini tu, kenapa misalnya graph cash in ni dia lebih rendah? Sebab nature dia, the first payment tu sendiri pun kita dah dapat lewat. Jadi bila kita push the graph to second ataupun second month ni okay lah. Kalau in another scenario we push the graph to the third month. The third month for sure we are going to see always kita dah spend so much money but then the payment datang tu lewat sikit. Itu jadi dia punya scenario dia lah. Mungkin kita akan lihat nanti scenario dia sekiranya ada kita panggil advance payment. Bila kita ada advance payment, then kita boleh nampak graf payment daripada klien tu, graf tu dia akan jadi tinggi sikit. Okay? So macam mana? Faham tak?
Okay, saya faham. Itu je soalan saya. Terima kasih.
Alright. So, how to determine the cash out intersection?
Determine what?
The cash out, the intersection, the point, right? Mentioned in the graph for the maximum requirement. That is a dotted line, right? How do we determine that?
Okay. Actually, the graph is basically based on the data that we are going to calculate. And if we are going to calculate the data, this is the data. Later on, based on the data yang we are going to show the example, actually, let's say we calculate the data, let's say, ni data kan. So to answer your point, you see, among this value, there is one which is basically maximum value is there. So that is the point yang you tanya tadi. But if you want to show into the graph, we can easily notice if you are plotting the graph using scale, immediately you can ukur, you can measure. There will be one point which is the highest point from this point until this one. But from our calculation, we can basically show. This is the one. But later on, we will go through the example.
Got it. Thanks.
Okay. All right. So now we can go for a 10-minute break before we continue with the rest of the slide. Okay then. Okay, welcome back. Let's resume our lecture. Factor that influence project cash flow. Project cash flow, first thing first is frequency of payment. Frequency of payment. How frequent if the payment from the client? If the client consistently pay in accordance to SOP, if for instance every month, that would be fantastic. But oftentimes even they say within in a monthly basis, but then sometimes the payment could be extended until 45 days or even 2 months. That is the issue. Okay. Delay factor. Delay factor in terms of processing, that would be an issue, or delay factor such in the COVID situation. For sure, you are not getting any money from the project because you simply cannot do the project. So meaning to say, if we look at this graph, for instance, the payment would be coming from here. This is what we call equivalent to payment. Just imagine, even the delay from the start of the project, let's say first month, second month, and even third month, the delay in terms of the starting of the first payment, you look at the hatchet, the area there, so it looks like it is a big gap between cash out and cash in, meaning to say contractor require much more money in this kind of situation. So the frequency of payment, delay payment, contract value and profit margin are interrelated, meaning to say if your project profit margin is very big, okay, is very big, and then your cost is not that much, in certain contract, maybe you are lucky enough, you can get that, especially in lump sum contract. So what happens is that if your profit margin is big, meaning to say this graph you are going to get this graph at a much higher, okay, at much higher, and then at the end of the day, see, the gap now is being reduced because of higher profit margin. And then retention fund, okay, retention fund, which could be around 5%. 5% will be deducted, okay, from what we call from value or payment, okay, payment received. That is the normal practice in the construction industry. We call it retention fund. So remember, those funds belong to the contractor, but just being held by the client due to the things that I mentioned before, but it will be returned back to the contractor. Perhaps maybe a certain portion will be returned upon the practical completion, meaning to say when you complete the project, so maybe in the next month you are going to get perhaps half of those things, and then the remaining you will get after the defect liability period. Okay, because the client don't need as much money according to 5% of the contract value, which is quite big. The client don't have to keep that amount of money for what reason? Even though they need that thing for repair is not going to be that much anyway. Okay, so it depends on the term. We really need to look at what could be the term and condition of the contract. Term of payment with the supplier. If you get a credit facilities, so if you take a look at this diagram, for instance, if you are getting credit facilities, meaning to say, which graph is going to be affected? Okay, for instance, if you are going to get this thing, credit facility from the supplier, meaning to say your cash out will be much lower. So you see, your graph will be like this. This is the example. Okay, so meaning to say the difference between the gap between cost and then payment would be reduced. That could be the advantages to the contractor. Okay, advantages to your cash flow. At the end of the day, you have to pay to the supplier for sure, but then you do have the cash with you that you can basically buat modal persingan lah. Front end loading. Front end loading basically relate to what we call unit rate. Remember, each of the BQ basically specify what could be the activity that you need to do, and then unit rate is basically the amount of rate, the amount of money that you need to pay per the unit of the material Either it could be counted in meter run, square meter, cubic meter, and whatever it is. And normally, this unit rate would basically consist of what we call man, machine, and then material. And one more thing is basically profit. So unit rate already consists of profit. Okay, consists of profit. So that's how the quantity surveyor normally would come out with the unit rate. Already accounted for. Okay, accounted for everything. And in terms of unit rate, they could be percentage. Let's say they already calculate what could be the portion of man, machine, and material. And then what could be the profit rate for this, what we call work. And the profit rate would not be the same for every item. It is like you go to the supermarket, Eon supermarket, for instance, there are thousands and thousands of items there. Overall, the retail industry would make around maybe 20% of the profit, the overall profit. But that profit would be spread, okay, not evenly, according to different type of the product that they basically sell. Maybe certain item, they would basically profit 10%. Certain item might be 15%. Certain item might be 50%. It depends, okay? So the similar situation happen in the construction work. So normally QS would know how to basically spread those profit. And front-end loading, what does front-end loading mean? Front-end loading meaning to say, putting higher profit rate on the item which basically appear first in the scheduling. Why basically you need that? Because you wanted to have a payment. Let's say if your payment is, you are getting a lot more payment, you see, a lot more payment than normal, you can basically reduce your cash requirement. That is the idea. But sometimes the client also know your trick. That's why at the beginning of the project, you are being asked to submit your S-curve, okay? And some of the S-curve looks very funny also. Okay, some of the S-curve, for instance, the normal S-curve would looks like that, okay? But some of the S-curve would basically have the bulging impact on the very beginning, etc., etc. So the client might not like this, and that's why the client will ask you to revise your CPM program. That eventually you need to revise the look of the S-curve, because they can catch the trick. Okay, the trick that you basically use in terms of front-end loading. Load a lot of profit at the beginning of the project. It is like the bank also. If you notice the bank loan, let's say you take bank loan for 25 years. So the bank basically load a lot of profit at the beginning, because they know if something happened to you at a later age, they already secure their money. That is the way they calculate. Okay, overpayment. What is the purpose of overpayment? How do you get overpayment? Overpayment means if you get overpayment, meaning to say this graph will be higher, isn't it? This graph will be higher. So when this graph is higher, then basically you reduce the cash requirement. That is the idea. How do you get overpayment? Well, the only way is basically to get to claim more than what you basically do. You claim more than what basically you do. In some situation, it could work because the client representative basically don't have time to check everything. They just basically let you go and then pay you. That's why payment that we receive, monthly payment, we call it interim payment. Interim payment meaning to say subject to changes at the later stage. At the end of the day, it will be equivalent to the total contract value anyway. But that interim, meaning to say, it could be subjected to changes. It is like you are getting some kind of dividend from your unit trust or whatever stock that you purchase. They will give you interim dividend. So interim dividend meaning to say it is not the finalized dividend. They could finalize later on, which you might receive a few more percentage of the balance in order to make the final adjustment. Okay, so in order to get overpayment, you have to basically overclaim. If they basically accept your claim, then you are going to have extra cash that you can turn around. At least you survive for that month. That is the idea. Okay, then subcontracting the work. Okay, subcontracting the work again. The concept similar to the supplier. Perhaps you are not going to pay to your subcontractor almost immediately. Maybe you are going to wait. Okay, you are going to wait for the payment from the client as well. So, but then because you are not paying to the contractor yet, meaning to say the money is still within your account. That is the idea. Okay, at least it can basically ease your cash flow. That is the idea. But later on, of course, when you pay to the subcontractor, perhaps after getting the payment from the client, so that would be equal to the original calculation. Advance payment. This is an example of advance payment. Okay, let me erase this thing. Okay, what could be the scenario of advance payment? Advance payment normally appear or practice in the government contract to help the contractor. The issue is that, well, government sometimes have to please many parties anyway. Okay, many people, parties, stakeholders. So they are given certain kind of contract, but then they might not have enough capital. That is the issue. So government come up with the idea of advance payment. It is like getting advance from PTN. Okay, some of the students coming to university, PTN already gave them 1,500 even before they start going to the university. Okay, it is like the same concept. So normally, if in the case of advance payment, it will be paid at the beginning of the project. So from our calculation, we can assume that the advance payment will be paid here at the beginning of the project. Let's say a certain amount of money, maybe 10% of contract value, but subject to maximum amount. Okay, subject to maximum amount. Okay, maybe 10%, 15%, I couldn't remember. Okay, let's say that would be the advance payment. You are going to get the first day of the project. And what would happen to the graph? Your graph will be like this. See, even though you might not get money from first month, second month, and the third month, but your graph is also, you start with the certain amount of money already. When you get the third payment in the third month, for instance, you see, your graph will be like this. And then subsequently will be like this. Okay. And you notice that you are going to reduce the financial burden that you have. That could be the situation. If, for instance, you get a very good paymaster, which basically maybe at the end of the first month, you already get your first payment, let's say. And on top of that, you already have your, what we call advance payment here. You notice what would happen to this graph. See this graph, and then you get first payment there, and you see, there could be possibility that this is the idea that why advance payment was created in order to ease the burden of the contractor cash flow. Okay, but not in all scenario lah. Only government project would basically do that, whereas the rest, private sector, sorry, they don't have those things. So those kind of factor which basically influence, either they will influence the cash out line, or they will influence the cash in line. But at the end of the day, we can see the difference would be how much is the cash required, could be worse or could basically in a positive situation. Okay. All right. Now we go into first example. Simple example first. Let's say we do have one small project, box culvert, okay, that we are going to construct on one of the small, what we call drain there. Okay, let's say box culvert is name of the project. The tender value and the cost for each activity are given. Okay, in order to solve this cash flow forecasting kind of calculation, we need two things: value and cost. Value and cost, we should be able to establish first. Otherwise, we are not going to be able to get cash in and cash out, because cash out normally associated with cost, whereas cash in we are going to associate with value, but not the exact value as in the contract, because remember, the payment that we are going to receive is not going to be the same as value, because there could be subtraction of the retention fund, could be subtraction of many things. But in general, we can equate the cash out equivalent to cost. So that's why we need the cost data, and then cash in, we basically we need the value data. Okay, both value and cost should be given, or somehow they are given in a not complete manners, but you basically need to understand this simple equation: value equivalent to cost plus profit. So you have to remember this formula, very simple formula, because sometimes in the question we will give value and then we also give profit in terms of percentage. For simplicity purposes, sometimes we mention percentage in terms of the value. Okay, so that you can basically calculate the cost, or vice versa. Sometimes we give the cost and then we give the profit. Then you can also calculate the value, because you know, if you the cost that you already given plus whatever profit given, you add those things up, then you will get the value. Okay, but in the first example, both value and the cost is given. I will show you the data. You are responsible, you are given responsibility to forecast cash flow requirement before the project start. Contract term, you have to look at the contract term in order to figure out about the payment term. But in this question, payment term is only simple, doesn't mention anything else. So if it doesn't mention anything else, then you don't have to consider those things. Let's say the payment will be released 2 months. This is the most important information. 2 months after each claim. And the claim will be done at the end of every month. So from this statement, you can imagine, let's say you are going to do the work first month, then you are going to submit the claim. When are you going to get the first the payment? So 2 months after the first month. So meaning to say it is on the 3rd month. That could be the possibility. Okay, that could be the possibility. Okay. Okay. Then let's take a look at this example. Okay, now this is the information given. This activity basically do have a few tasks: excavation, piling, pile cap, culvert, etc., etc. Okay, and then the value is given. The value for each work, the value. You notice that the value basically should be more than the cost, because otherwise you are not going to get your profit. Remember this equation: value equal to cost plus profit. So in this example, the value is 17,000 to do the excavation work, whereas the cost is 15,000. So that is basically the logic. So you are making around 2,000 ringgit of profit for the excavation work. Okay, that is what normally would be the distribution, the differences between value and the cost. Normally the cost would be less than the value because of when you add the cost with the profit, then only it will form the value. But and then also the information give the start and then finish date. What does this thing basically tell us? Start and finish date. Well, remember when we want to do the cash flow, the S-curve or whatever, remember we need to have this thing, the Gantt chart. So the Gantt chart now is given in date form. So in this kind of situation, the question is much simpler. So once you already have the Gantt chart there, then basically you can draw your the date is here. You can basically draw your Gantt chart easily. Then piling, the value is 80, cost 70, and then pile cap 60 and 55, and you notice culvert. Culvert, the what we call the value is 70, but the cost is higher than the value. This is what in normal situation, not all the work that you do are going to get going to be profitable. It's always like that. If you are selling item, 1,000 and 1,000 item, they could be item which basically you can really make money. But you have to put it there because once you open a shop, people would like to go to the shop with everything inside. Whereas you cannot sell for a lot of profit. But you just put it there because that is part and parcel of the whole system. So similarly, in construction is also like that. This is just exactly the example. Culvert also you are doing at a loss, and then backfilling is okay, and then cleanup is okay. But overall, your value of work is 332 based on all these what we call summation, and the cost is 307. So the difference between 332 and 307 is basically we call it profit. You see, 332 equivalent to 307 plus 25,000 of profit. This is what we call profit. And sometimes the question also asks you about the profit. What could be the profit for this project? But not as simple as in this question is very straightforward. But in other question, it much more complicated than that. But sometime after doing all the whole calculation there, you already have certain values in order to give you points. So we just simply ask that question, but it is a bonus point anyway. What could be the profit of this project? So you already know. Once you already have the value, and then the cost is, you already have the cost. So profit is just matter of subtracting the value with the cost. That would be the profit. Okay. So this is the data. What you have to do with the data? First thing first. Once you get the data, then this is what you need to do. You need to draw the Gantt chart. Okay, because the information only give you this date. So you need to draw the Gantt chart. So the Gantt chart is based on this date. So I already draw. And so the first step, I would say drawing the Gantt chart. Draw the Gantt chart. Okay, that would be the first step. Then second step. Second step is basically to get the monthly value and the monthly cost. Monthly value and monthly cost. We need to have those two values first in terms of value and in terms of the cost, but monthly according to the month. Okay, now let's focus on this color only. Okay, now let's go for the first month, May. If we use this color, excavation is basically 70,000. So this item is basically running for 1 month, equivalent to 17,000. Okay, 70,000 or 17. We just use the word 17 for easy reference. So 17. And then how about this one? This portion, actually the cost is 80,000 for the whole of the bar here. But how are we going to split? It looks like we can split into 4 parts, isn't it? 4 parts. 1, 2, 3, 4. So meaning to say this is 1/4 of 80,000, which is equivalent to 20K. When we have 20K, this one is 17K. 20 plus 17, which is equivalent to 37K. All this thing is in 1,000. So this is how you get the monthly value based on the same color. Okay, I just use the same color so that you can you can relate those value. And then how about for the June? Again, we are concentrating on the value aspect using the same Gantt chart. Okay, so June basically this aspect. It looks like half of the bar, the whole bar there. So half of the bar, it looks like 1/2 of 80,000, 80K, which is equivalent to 40. And then July. So July, it looks like 2/3 of this bar plus 1/4 of this bar. So 2/3 of that bar, you can time with 60,000, 60K, plus 1/3 of that would be, no, 1/3, 1/4 of this thing would be 20K. So this would be 20 plus 40. This is 40K, plus this one is basically 20, and you end up with 60. So you do that for the rest of the month here, according to the month, and basically you already get the distribution of monthly value. And when you add this thing up, you are going to get this value, which is equivalent as if you are adding all this value all together again, you should end up with this value. That is basically the checking. So you need to get the monthly value distributed according to the month. Okay, next would be monthly cost. Okay, monthly cost, you use the what we call the blue in color there. Okay, now you focus on this one. Focus on this what we call amount. We are going to use the same bar chart because the bar chart is only one, except the value that we are using to calculate in the month of May here. This is equivalent to 15K. This is 1/4 of, we can calculate 1/4 time with 70. Instead of using 80 now, we are using 70 because we are calculating this one. Monthly cost. So 15 plus 1/4 70, you will end up to be 32.5. And then for the month of June, so this one is basically like half of 70K plus, or you don't have to plus, okay, that would be 35, okay, half of 70K. And then July, you take this one and this value based on this value, you will get 52, and the rest, the same kind of concept. When you add this, all this value, this basically value, I mean the amount, you are going to get this cost. The same thing. That is basically the checking. What we are doing is basically we are establishing the data first. That is what I mentioned in step number one. Step number one. Okay, the step number one is what we are doing right now. Okay, establishing our Gantt chart, and then establishing the monthly value and the monthly cost. Those things must be made available first. Without this thing, you cannot complete the calculation. Okay, next. Once you already establish this, then you can come up with what we call table. It is easier for if you can use what we call Excel form, because we need to come up with what we call row and columns. Row and columns, okay? We need those things. But in terms of the row, it basically depends. Some people would arrange what to put in row number 1, number 2, number 3 in a different order. It doesn't matter, because there is no strict guideline that you need to put first row about cost or first row about value. No. The most important thing, you are the one that know which value you are going to consider as net cash in and cash out. That is the most important, because the last value that you are going to get is basically cash required. Item number 6 here is basically the subtraction between cash out and cash in. So for this example, I just arrange them in two parts here. If you notice, item number 1 and 2 is basically all related to cost, whereas item 3 until 5 all related to basically value. Item number 5, we call it payment. The last thing that we want to count in terms of cash out, but it is also related to value. So that is the starting point. So that's why we calculate cost and then we calculate value. All right, now let's go through this table here. Where do we start? First thing first, we start with the what we call timeline. Remember, our project start from May, so this is May. This is the starting of the project, and then June, July, August, September, October, and November is the finish. So you see, November is the finishing of the project. But how come I do have April before the start of the project, and then I do have a few months, December, January, and February. If you remember the graph that we show you see, this portion. When you do the calculation, you are going to extend a few months, because the payment that you are getting is not going to be immediately stopped when you stop a project. It will be extended a few months. So that's why we always do that. We extended a few months, then only you would be able to see how the calculation will basically complete or close or according to the accounting system. Okay, April. I just put April there so that you will understand later on when we calculate the cash required, because there is a concept of the previous month. Okay. Now let's start with the monthly cost. Monthly cost. Remember, we already calculate the monthly cost here. 32, 35, 84.2, etc. Well, what you need to do is just simply copy. If, for instance, you already have a big piece of paper at the bottom of the slide here, for instance, then you just continue. You don't have to make another table. You just continue with your calculation. So that's why when you want to do this kind of calculation, normally you will do on a big piece of paper so that you can just add column after column or row, so that you don't have a few table as what I did, because the issue is that I want to show in the slide. It cannot fit all. Okay, so you see, this value is the one that we already established, and just I copy back into the right column there. Okay, then what I need to do is to make it cumulative. You see, cumulative, I put at the end of the line here, see, 32.5, I put it there first. Then how do I get 67.5? Is basically I add back the first month cost with the second month cost, 32.5 plus 35, which is equivalent to 67.5. This is what we call cumulative monthly cost. And if you notice something, at the end of November, 307. 307 is equivalent to this 307 that we already calculated. You see, it's the same thing. Which you should get the same thing, because what we are doing is basically manipulation of the data in term to make it in term of monthly and then cumulative. Then for the cost part, it is quite easy. You just have to identify what could be the monthly cost, and then you make it cumulative monthly cost. That's it. That's it. You don't have to do anything. But when it comes to payment, when it comes to what we call cash out, you could have a few more what we call row, because there could be many more terms being imposed in the contract document that you will see in the next example. But for this example, it is very simple. Okay, monthly value. Remember, we already did our monthly value in the previous slide. So 37, all this value, you just simply copy back and put it here. So you just simply put it here. Okay. Then you have to make it cumulative. Cumulative monthly value. So the first month, then you put it here, and then 37 plus 40 equivalent 77, etc., etc. And you notice 332. 332 is the same thing that we already calculated here. You see, all the same kind of value, except one is monthly, and row number 4, which is equivalent to cumulative. Okay, next, row number 5 is the cumulative payment received. Okay, now we need to conclude what could be the payment that we are going to receive. So as I mentioned to you, the payment is basically from the value that you are supposed to do. Remember what is the value? This is the value. So this is the value of work, meaning to say the tender value or the contract value. So by right, this is what you are supposed to work to do, and this is what the client is supposed to pay you. As simple as that. Okay. So in this scenario, we already have the cumulative value based on the classification of activity there. Okay, fine. Then how about the payment? Since in our document, in our example, the term of payment doesn't mention any other thing except that when we are going to get the first claim, the first payment. That's it. So we assume in this project, there is no retention fund, there is no nothing. So whatever thing that we basically claim, the value, the same value will be paid to us, to the contractor. As simple as that. But the issue is that when it is going to be paid. When it is going to be paid. So based on those information, 2 months, payment will be released exactly 2 months after each claim. Okay. So now 2 months. Let's say we assume this is the first month of work, and then we submit claim. Okay, this is basically already encroached 2 months. Okay, so the first payment would be after 2 months. So we assume that normally you are not going to get the payment in this month for sure. So this one is basically the first month, and then this is basically the second month. So that's why you are getting the payment in the second month at the end of the second month. Okay, because the first month is just you just complete the work, but then you need to submit the claim first. So the claim will be processed in 1 and then 2 months, as this statement basically reflect 2 months. Then that's why you are going to get the first payment. So the first payment is basically equivalent to this amount. So you see, 37, where does 37 come from? Is from this amount. Actually, when you already have this amount, what you need to do, you just simply copy and paste. But you need to copy and paste on the right place. We need to say, once you identify, oh, this is the right place, then everything will be sitting there just nicely. You don't have to do anything. Just basically copy paste, because that is the amount that you assume when you basically submit the claim. So you are going to get the same amount. There is no deduction, nothing, because the contract term does not say so. But in other question, you need to read some of the term. But normally we are not going to give that complicated thing. Only one or two term, in just to test your understanding. How are you going to incorporate that if those term is there? How it will affect your the payment? Okay, the payment will be reduced slightly. It's not going to be equivalent to 37. It will be reduced to a certain extent, but everything you can calculate. Okay, now when you did item 3, 4, and 5, meaning to say you already complete things related to payment. Okay, so in order to get the payment, the row number 5, you need to establish the monthly value first. And then from monthly value, you convert into cumulative value. And then the cumulative value represent the value of your work, but the payment is another thing. In many cases, you might not get the payment equivalent to the value that you do, because there could be deduction. But in this example, it's very straightforward. Okay. Then lastly, row number 6. So row number 6 is the one that we want to figure out. And you can read the definition that I put here. Cash out, cash required is equivalent to cash out of the current month. Current month meaning to say whatever month that you want to calculate, so you take the cash out of that particular month, then deduct with the cash in from the previous month, not on the current month, not on the same month. If you do that, then the calculation is not going to be accurate. As I mentioned to you, you have been suffering for the entire month before. Only today is the payday. So which value you are going to consider? Is it on the first day or for the past 1 month that you have been suffering? Because the money that you spent before is based on the previous month payment. Okay, so that is the idea. So I give you also example here at the bottom of the slide there. Example, in the month of May, how do I get this value? 32.5. Remember, I want to figure out the cash required. The cash required is equivalent to, let's say for the for May, cash out for May minus cash in for April. April meaning to say we have not started the project yet. Okay, if we have not started the project, meaning to say we have no income, zero income. So the amount of money is basically zero. So now 32.5. 32.5 cash out I should write here, cash out, you are going to use row number 2. Maybe I missed that thing. Row number 2. How about cash in? Cash in, you are going to take row number 5. That should be much clear, because I missed those row. I put row numbering, but then I forgot to put it here. Okay, row number 2. Where is the row number 2? Let me erase some of the... Okay, let me erase all this thing. We want to focus on... Okay, now. Remember, our focus now for the cash requirement is only on row number 2 and row number 5, which I already colored. The one is in yellow. Yellow is 32.5. So you take this value, 32.5, because in the month of May, this is the cash out that you are going to focus, because you already spent this amount of money to pay your workers, to pay everybody. But then, how about the payment for that month? Well, the payment for that month, for sure it is 0, because you have not started the project yet. But you are not going to deduct with this value 0. You are going to deduct with the previous month, which basically in the month of April, which is also 0. Meaning to say, this value you are going to deduct like this. Not straightforward on the same month. Because remember, the cash in, we refer to the previous month money that we have. That is what we are even right now, what we are doing right now. Right now is what? 13th of November, isn't it? Whatever the money that you spend now today is the money that basically you get your salary from previous month. So what we are doing in the cash flow is exactly the same thing. Okay. So this is how we get 32.5. So that's why I created, or I put April as in the column there in order to make you understand. Okay, that is the example. Okay, now let's go for June. Cash out for June, 67.5. So which value you are going to deduct? You are going to deduct with this value, previous month, which is also 0. So that's why you get this value. And then how about July, 1 to 1.7? Still you are going to deduct with 0 because there is no income yet. That's why you get this value. And then August, 177, you have to deduct with, now you are getting some money from the first month of the job that you already did. Only the client only pay you in the 3rd month. Then you will get this amount, supposed to be right. Then September, 249. And then you are going to deduct with this value. 77, you get 172. 291, you are going to deduct with this one. You should get this value. Maybe I draw that way, that would be better. That would be better. And then this one, you deduct with this one, so you get this value. This one, you deduct with this thing, you will get this value. And this one, you deduct with this thing, you get this value. And you see, last one, you deduct with this thing, you are going to get 25 negative. Remember, I told you the negative 25 in this example mean excess money. It is not the bad money, negative. Normally we assume. But in this example, the focus is basically cash required. Cash required means to say the cash that you need badly. Okay, now you already have excess of money. Where does the money come from? Actually, from the profit. You see, the profit for the past, from May until whatever January, actually you are not making any money. Okay, you basically require money. You need to borrow money. Only at the end of the project you can see the profit. This is what I tell you before. Being contractor, you need to have capital. Some of the contractor want when they start a project, When they get the first payment, oh, they are already spending like hell, as if the money belong to them. Well, actually, the money belongs to the project. The only thing that they can enjoy is their salary. If they are getting salary from the project, that is the limit that they can spend. But because of this contractor, also sometimes they are contractor bukan yang berwibawa. That is the issue. Okay, a good contractor would basically know the accounting system. They only basically spend based on the salary, their salary given to them. So whatever thing that belong to project, still it basically belong to project, because you never know, you might need money for unprecedented event or whatever. Okay, so after you are getting this one, you notice that among the value here, there could be value which basically could be the highest value. So the highest value, this is the one that we basically want to focus, and this is the answer that we are looking for. And when is the maximum cash required is happening? It is happening at the end of September, because all our calculation is basically based on end of the month. So the conclusion that we can say, the cash required for this project is 172,000, and it is happening at the end of September. Now, if for instance, in order to fulfill item number 4 in our step 4 here, which is not required, okay, this is just optional or bonus. Okay, you can plot a graph based on row number 2. You get all the values and then the timeline, and then you can plot graph value from row number 5. When you do that, you are going to see this kind of plotting. Okay, so this is what we call cash out. Cash out based on row number 2. And then this is what we call cash in based on row number 5. And how about row number 6? What is the value of row number 6? Well, row number 6 simply mean the difference between this. The difference between this, the difference between this and this, the difference between this point and this point. Don't take, look at on September. What we did just now, how do we get 172? It is basically 291. So this is basically, where is it? 249. Okay, 249 is here. You see, this is 249K. This point here, we deduct with 77. 77, we do not deduct with this point. If you deduct with this point on the same end of September, meaning to say it's wrong, because you can see the cash required is not that much, but you have to deduct from the previous month. So 77 is basically here. So that is the right concept. I know some of the books, if you read many books, then basically you will figure out some basically just simply took from here to here. But in our case, we would like you to take from the cash out there, and then the cash in is from the previous month. Previous month means to say August, not on the current month. Current month is basically the amount of money you just received that particular day. That is not that significant. Okay, so that is what this cash flow forecasting is all about. Okay, now I open up to the question before we go for perhaps another example. I do have a lot of more example in my slide, just to give you the variation in term of condition, etc. Now let's open up. Do you have any question? Do you understand?
Tengah hadam sekejap.
Belum masuk lagi. So tak apa, don't worry. Okay. All right. So, okay. So can we go for the next example? Are we going to take a break? 5-minute break. Okay. So
Can continue.
yeah. So we take a 5-minute break before we go into our next example. Not much more. Okay. Perhaps we are going to finish very soon, but never mind. Just take 5-minute break before we go into this slide. Okay, let's continue with another example. Okay, this is typical exam question with regard to this topic. Okay, first thing first, what could be the information given? So you have to read information given. First thing, value of work. Remember, when we want to develop data, remember this formula: value equal cost plus profit. So it looks like value is given. How do you know? It is mentioned here, and then the data show the value of work. Okay, so you already settled one thing. The only thing is that you need to figure out about how to get the cost. So the cost is not given because from the table, it just simply gives you the value. But from the formula, you can get the cost. How do you get the cost? You need to have the profit. Now the profit is being shown in this form. Profit margin is 10% of value. Well, profit, if you calculate the profit, basically, from the contractor point of view, normally contractor will calculate cost, and then from that, it will mark up. So the profit will be the percentage of the cost from contractor point of view. But for the client, basically, it could be the other way around, okay? As in the case of negotiated cost and negotiated contract and whatnot. But for simplicity purposes, as not to get people confused, we are going to simplify, meaning to say we say 10% of the value. Meaning to say if the value is given here, then how do you know the profit? You are going to take 10% of this, okay? 10% of this would be the profit. So, but then the cost would be deducted from the value because value plus cost equivalent to profit. The one that you already have, basically the profit. In order to get the cost, you need to basically deduct the value from the profit. How to calculate the profit? This is the way the profit is given. 10% of whatever the value is given, just for the sake of making this calculation simplify. Because the cost is always less than the value from the concept that we can see here, okay? So don't get confused because in other question, let me get other question. Do we have any question? Okay, unfortunately, all the sample question that we mentioned here, except on the last one, the last example would be we use the cost. But for the exam question that I put it here, everything is about value. Even this one is wrong. If it is cost, then this thing would basically be mentioned the cost, not the value. So if the cost, then basically in order to get the value, you need to add with the profit. As simple as that. Okay, now we go into the information first. Retention money is being mentioned 5%. And remember, retention money have to be deducted from value, not from cost. Should be deducted from value. Okay. Progress payment is on monthly basis, and measurement will be made at the end of each month, and contractor receive payment 1 month later. So meaning to say the first month, contractor is going to do the work. Then at the end of the month, he is going to submit the claim. Then only on the second month, end of the second month, he will get the first payment. Okay, so you must put the first payment on the second month, starting from the second month. That is, this is what the statement is all about. And then, contractor is given advance payment. This is example. Let's say, in this project, contractor is given advance payment 700,000 at the start of the project. The advance payment will be returned to the client since it is advance payment, that money basically belongs to the client. It is just being loaned to the contractor, and the money will be transferred to the contractor account at the beginning of the project. So meaning to say, at the beginning of the project, contractor already have 700,000. And if for the first month, contractor already have 7,000. For the second month, contractor also already have 7,000, isn't it? For the cumulative. If, for instance, contractor is getting the first claim, that will be the additional. So you will see later on how this thing will affect the calculation of the contractor cash flow. The money, the advance payment have to be returned to the client through progress payment deduction, starting from the end of 4th month until the end of 10 month equally. Meaning to say, every month, starting from the 4th month, 100,000 is going to be deducted from contractor payment received. So now perhaps you get the idea. The payment received is going to be deducted with many things. Previously, we just basically take whatever the value and then assume that is the payment received by the contractor. Yeah, the origin is from the value, but then you need to deduct 5%. You need to basically add this one. This is good, positive, but then you need to deduct back. So this could be negative, a little bit negative, meaning to say some deduction from the value that you calculate early on. The 700,000 is okay, positive, but then you need to deduct back. So that's why I created in my row number 5, I call it cash in. Cash in basically is the net, okay? The net payment received after you deduct, you add in whatever. So we basically put in one row. So at the end of the day, we just simply can deduct from only one row and then deduct from the cash out and cash in from only 2 row which basically have been can be considered as a net amount. Okay, you can create many what we call row in between, but the most important thing, you must know which row to deduct. Okay, then retention money is repaid in 3 months after practical completion. Okay, in this particular situation, just example, the client is basically very nice. After the project completed, practical completion, then after 3 months, then the retention money that the client basically hold is going to be released. So if this is being released, meaning to say it will go into the contractor account, payment received. But most of the time, because it is being released after the practical completion, it will not affect so much in terms of the calculation, because our intention is to figure out about maximum cash required. And normally, maximum cash required would happen somehow in between here. See, it will not happen at the end of the project. So this is a trick. If you already understand the trick, basically you can basically ignore. If you want to do the calculation in full and to see how the account basically close, yeah, you have to do that. Because at the end of the day, for sure, you are going to see the account is going to close very nicely between cash out and cash in. And then basically you are going to see the profit is equivalent to what you calculated before. So if you want to do that, but if, for instance, you are running short of time, basically you understand this statement is not going to be affected from your calculation anyway, because what you need to do is this one. Okay, what assuming calculation costs must be met instantly as they occur, you may also assume the monthly value and cost for each activity equally distributed. Okay, so that is easy because we assume that you are going to prorate according to the month. Okay, now this is the information given. First thing first, you must look at this value. Sometimes the question might change, might give you cost. If it is cost, then you use the same equation, value equal to cost plus profit. So cost is given, profit will also be given based on cost. So what you need to do is to get the value. How to get the value is whatever cost given plus the profit, then that is the value. So basically you need both value and cost, as in our example previously. See, we always have the value and the cost. So those things must be established first. Then the Gantt chart. Okay, now the Gantt chart. So the Gantt chart now is given in what we call different situation, is given in the PDM diagram. PDM diagram. So from this PDM diagram, you should be able to visualize. You don't have to solve in terms of PDM diagram, but later on, once you understand the concept of Gantt chart or even arrow diagram or PDM diagram, you can see the connection between the three. Later on, you need to practice on how basically we get this diagram. Okay, so the predecessor is given. What you need to do, first thing first, is basically to draw the Gantt chart. Let's say activity A. So activity A basically is the start of activity, and the duration is basically 2 months. You see, this is A. This is A. And then activity B. Activity B is basically also 2 months. The connection is from A, but finished to start by -1. So meaning to say the start of B is the start of B basically lead by 1 month. So there is an overlap there. So from the diagram, you can draw, you see, there is an overlap here. This is what we call finish to start by 1 month. So you can basically, without going through the PDM diagram, you basically can draw what we call the bar chart based on this information. But it will take some kind of practice in order to see the connection. Okay, once you get the idea, you should be able to draw. But the issue is that once you get the drawing wrong also, then the whole calculation will not be accurate. That will be one thing. So you need to get the Gantt chart correct. Otherwise, you will take a few years in order to get the right answer. Okay, the right answer you might not get because you got the drawing wrong anyway. Okay, now, so first thing first, you need to establish the Gantt chart. The monthly value is given, okay, and based on monthly value, let's say 800,000. 800,000, you notice that 800,000 is being distributed equally for the first month and the second month, because that is, you might want to write 800 here. 800. Then what else? B is 1,600. 1600. In that way, you can see better. See, 800 and 800. And the rest of the thing, you do that. Okay. Next, monthly value. By right, it should be value, as not to get confused. Monthly value. So you can distribute according to January, and then February, 800 plus 400 would be 1,200. March would be 800. So you already established monthly value. But how about the cost? Well, the cost you need to calculate. Now we are going for the next step. Okay, so the next step, we can draw in column and row. So we put all the information first on this paper so that we are not going to get confused. We notice that the advance payment is 700,000 is there. Retention money is 5%. profit rate is 10%. That is the information that is given. Okay, so the first thing first, value for each work for the monthly value. This is monthly value. How do we get this? This is from our previous Gantt chart. The information given from the question. Okay, so this is easy part. Cumulative value, also the easy part, because you take cumulative from the first month, and then the first month plus the second month, so you will get this value. And then this one, you add this one, you will get this value. So you notice that at the end of the contract period here, 12,900. This is what we call contract value. You already know the contract value for the project is 12,900. Okay, let's take a look at the question. The first question asks, what is the total cost of the project? This is a bonus question. Remember, value equal cost plus profit. You already know the value of the project from the first, the second column there, the second row, 12,900. Okay, 12,900. That is basically the value, but the question asks for the cost. The cost should be less than the value. So how to get the cost? Now the profit. The profit is being mentioned 10% of the value. If, for instance, you take 10% of this thing, okay, 10% of this thing, basically you will know the profit. But you can basically, instead of putting 10%, you can just simply time this thing times 0.9. You should get this one. Okay. So this is what we call bonus question. Without going through the calculation, if you go through the calculation, eventually you will get the answer as well here. You will get the answer. Okay, how do we get the answer there? Okay, now let's go, if you want to go through the calculation, but you don't have to, because based on the formula there, you already know that is the equation. Value equal to cost plus profit, except that you need to establish how much is the profit. The profit is also given in terms of the simple rate there. So then you have to deduct, or you simply time 0.9, because the profit is 10%, isn't it? Okay, now let's go into, if we want to go through the whole calculation, we would do this. This is just example. You don't have to do row and column. Is everybody will come up with their own. You can basically skip some of the row, in fact. Okay, now let's go into profit. So profit, for simplicity purposes, it just simply mentioned the gross profit margin for the project is 10% of the value. 10% of the value. What does profit margin mean? Okay, perhaps I do miss those things. Okay, now let's go into this example. Okay, you notice that this is value. This is what we call cost. Okay, the difference between value and cost is basically the profit, 25,000. If, for instance, people ask us the profit margin is in the form of percentage. But the issue is that 25,000, you want to get the percentage, which you are going to divide with what? Are you going to divide with 332K? Or you are going to divide with 307K times 100, then you get percentage. So which one is which? That is the issue. For contractor, as I mentioned, because contractor normally calculate the cost, and then the profit margin can be considered as markup. So this could be the calculation, whereas the client could be looking at this one. So that's why in our example here, we spell out very quickly 10% of value. So if, for instance, you get this thing. This is basically based on value, isn't it? If you are doing this thing, this is based on cost. So depending on the data that we are given, automatically you don't have to think about which one is the right, because if we are giving you the value, so the percentage is basically based on the value, that will be the profit. As simple as that. Okay, don't crack the head. Okay, now okay, the profit margin is given 10%. So if we are going to spread that thing throughout the entire project, so that would be equivalent to 10%, 10%, 10% every month. And there are cases where the profit margin could vary according to the month. There could be cases, but for our example, we just simply want to make it simple. We do not say anything. Just from this exercise, that is the information that we give, so we can assume that it is going to have the same rate throughout the entire project. Okay, how do you calculate profit? If it is 10% of the value, you already have the value here in the first, what we call in the first here, the first row there. So if it is 10% of this one, so that will be equivalent to 40,000 for the first month. 10% of this one, so this is the profit. We can split the profit like that, okay, if you want, for the purpose of accounting system here. And then, which basically lead us to monthly cost. Remember, value equivalent to cost plus profit. Since we already have the value, we already know the profit. Can we get the cost? For sure we can. So the cost 360 is simply mean 400,000 deduct with 40,000. So that's how you get the cost. But if you do not want to do like this, why don't you take 400,000, you simply time with 0.9. For sure you are going to get this value, because we already mentioned to you 10% of the value is the profit. So for simple calculation, you already know the cost is for sure is much less than the value. So that will be the amount, okay? But we can do that bit by bit, okay, because you have plenty of time. So if we do that, then basically you are going to get the monthly cost. When you have the monthly cost, then you can have the cumulative cost. So 360 is for the first month plus second month, and then you get the second month cumulative. Then at the end of the period, you are going to get this value. 11,160 from the table is the one that the question basically asks, the cost, okay, the cost. But without going through the table, once you get the value for the overall project, very quickly you can get that, because you can get from this information, you can add all these things. This would be equivalent to 12,900. This would be equivalent to 12,900, 000, and you want to get the what could be the cost of the project, just times 0.9 factor. Then you will get the cost. You see, without going through. So that's why I said to you, this is a bonus question. If the project basically give us value, normally the first question that we can ask, if we want to ask, would be the cost. If the information is given the cost, then the first question could ask for value. So you you use the same kind of equation, you will get the answer. But then the most difficult one is this one. Calculate maximum cash required, and then at which month. So this question and the previous question, maximum cash required, you can get almost instantly, because once you get the maximum cash required, for sure you know in which particular month is going to take place. So both questions are basically interrelated, except that this one is another twist. Okay, it's asking for monthly payment, not the cumulative. Okay, never mind, just simply go through our slide here. Okay, so cumulative cost we already established. All right, then monthly claim. We can put another row that we call it monthly claim. How much do we claim? Actually, we claim equivalent to the value, similar to value. You can look at this thing, value. Okay, so this is what we are entitled to claim. Okay, so we just put it there. But then this comes the retention money. Remember, retention money is the negative thing. Negative thing meaning to say thing which have to be deducted from our claim. 5% from the value or from whatever thing that we can claim. Do not deduct the retention money from the cost. No. Deduct the retention money from the value or the money that the client will basically pay you. Okay. So if, for instance, 5% deduction out of 400,000 would be 20,000. So this is just to show you how do we get the value. So 5% from here will be 60,000, etc., etc. And then we can also make retention money as cumulative in order to know at the end of the project period how much the amount of money being retained. But you don't have to calculate if you want to know the amount because you already know the 5% is going to be deducted from the value of the project. What is the value of the project? You already know, 12,900,000. So if you time that thing with 5%, you already know the amount of retention money going to be kept in the account, which is equivalent to this one. Okay, so retention money 20,000. Actually, if you want to make it cumulative, this could be the value there. This could be the value. By right, we should put this row on top of that thing as not to get confused. Okay. All right. So that would be retention money. So retention money, I would say it is the amount will be negative because it will be deducted from the contractor monthly receive later on. But then, let's say this amount of money, 645, will be retained, will be given back to the contractor 3 months. So even 3 months is not part of the calculation because it will not be affecting the question that we would like to ask to answer. So it is okay. Just want to show you. Okay, another row, advance payment. Perhaps we can put advance payment as one of the row due to the fact that in this question we do have advance payment. You notice that advance payment will be paid to contractor account at the beginning of the project. Meaning to say contractor will receive 700,000 as a positive. Positive meaning to say a plus to the contractor account. But then 100,000 is basically the negative. Negative meaning to say have to be deducted. But in this calculation doesn't show negative, so but we understand is going to be deducted. Okay, it's going to be deducted from April, remember, until October. So if you add 100,000, 1, 2, 3, 4, 5, 6, 7. So contractor client is going to give you 700,000 at the beginning, but then it's going to take back the money starting from April until October. That is example. Okay. Normally, government is going to spread the payment of the advance payment, not going to take almost everything at one go. Okay, now, so cumulative retention we already mentioned. Once you have the retention monthly, then you can do cumulative because that cumulative will be affected later on. Okay, monthly receive. Okay, monthly receive. Monthly receive meaning to say the amount of money that you are going to get per month based on your work. First month, 700,000. Where does this 700,000 come from? Actually, it is coming from the advance payment. Actually, contractor do not do anything yet. There is no work being paid on that particular month because the work just started. For the entire month, you are not going to get paid, but you already have the money from the advance payment. So in the accounting system, you have to put 700,000. Normally, we are going to put 0, isn't it? But not in this particular example. Okay, for the second month. Okay, for the second month, it's basically the 380 is the money that the amount of the money based on the amount of work that you did on the first month. Okay, remember the first month, you basically, this is the amount of work that you basically did, 400,000. You are entitled to this claim for the first month, but it is going to be paid on the second month because the question, the term says so. You see, remember the term, this is the term. Item number 3, whatever thing that you do in the first month, for instance, you will need to submit the claim, and then only on the second month, you are going to get the first payment based on the first month of your work. So that's why 380 is there. Why 380, not 400? 400 is the amount that you claim, but remember the retention money. So that's why the retention money, retention money. So, okay, let's say we want to focus on this amount. Where does this amount come from? Actually, from monthly claim for the first month. The client is not going to pay you immediately on the first month. It's going to pay you in the next month. Okay, that is the concept. But you need to deduct. Remember, this is negative. You need to deduct with this thing. Then the first payment you are going to receive on the second month. 700,000 is from this one. Actually, there is no work being done yet, but the money is there because you already get the advance payment. Okay, 1140 here. Where does this amount come from? Okay, remember the second month, this is the amount that you basically did. You are entitled to get this amount, but you need to submit the claim first, but then subsequently the following month you will get the payment. But you need to deduct with retention money, which is 60,000, then you get this amount. See? So similarly, how do you get 660 there? Based on 800, you have to deduct with this thing first, then only you get this thing. 800,000, you deduct with this thing, you will get 760. But now it's this 660. Well, you notice that there is one deduction, negative 100,000. Actually, you need to deduct with this thing also. Then only you will get 660. Because the payment is basically going to pay you on this month. But this month also you have you basically own a client 100,000 from the advance payment before. Okay, now let's take a look at this value. Where do you get this value from? Okay, you take 1.7 million there. You deduct with this amount, but then you have to deduct with this thing. Then only you are going to get this one. Okay, so again, let's go into this one. 1.7 million, you deduct with this thing, and then you deduct with this value, 100,000, then only you are going to get this value. So that is the calculation for the rest of the what we call the month. Okay, but this is what we call monthly payment received from the client. Okay, so monthly payment received from the client, you take the amount that you are entitled from the value, original value. You need to deduct with what we call retention money, and then you need to either, on the first thing, you either add with this thing, whatever the money that you get, or you have to deduct back with the advance payment that you have to give back to the client. Then only you will notice this amount that you are going to receive per month. So once you do that, then only you go into cumulative monthly receive. Cumulative is just basically the cumulative month per month, first month, and then you add with the second month, you will get this value. You add with this night, you get the value. And at the end of the day, basically, you will list out the value. Never mind, you can go extra. Okay, so cash needed. This is the ultimate answer that we are looking. Remember, cash needed is basically cash out minus cash in. Cash in previous month, not the previous month. Cash out is the current month. Okay, so now let's take a look at this value. How do we get this value? Okay, 340, meaning to say it is a negative. When it is negative, meaning to say we do have excess money. How do we get this 340? So first thing first, we need to establish cash out. Which row that we are going to focus on? Well, we are going to focus on row colored yellow, this one, cumulative cost. Minus, okay, minus cash in. Minus cash in is basically this row, the second last row. Okay, perhaps we can, maybe we can erase some of this thing. Just not to get confused. Okay, we are going to focus on, okay, we are going to focus on these two rows only. Okay, that's the good thing is that once we already zoom in the right column, this is what we call cash out. The net cash out. Normally the cash out is very simple. The cumulative cost, we do not take into account many things, just very straightforward. But the difficult one with regard to cumulative monthly receive or payment receive, or what we call it cash in. So this row here. So we focus on this row. This is what we call cash in. Remember, the cash in is already net. We already take into account. Remember, the issue with this thing is plus, negative, thing that need to be deducted. Retention also, it need to be deducted. Okay. Okay. So the net row that we are going to take into account is basically the yellow row here, the cash out, and then the cumulative money received or cash in. Okay, let's take an example of this value. How do we get this value? First thing, 360 is the cash out. 360K minus, okay, remember, minus if it is on January. If, for instance, you are going to take this value, this is what we call cash in, meaning to say you are going to consider the current month, whereas we mentioned we should take the previous month. Previous month is basically December. Let's say it is December on the previous year. So what is the amount of money that contractor have? We assume that contractor basically received the money at the beginning of the project period, the start of the project. So meaning to say, contractor also do have 700K here at the beginning of the project. So we are not deducting with this value because it is on the same month, but actually we are deducting with, let me erase this thing so that we are consistent with our explanation here. Okay, by right, we are deducting with this value with this 700K at the beginning of the project, which is also equivalent to 700K. When there is an advance payment, we always assume that the money is going to be into the contractor account at the beginning of the project. So the start the project, contractor already have 700K. So that's why 700K is there. So 360 minus 700K, you are going to have negative 340K. So this is the amount. Negative meaning to say contractor do have excess money. So contractor don't require cash. So it's a good thing. Okay, next. February. Cash out. This is the value of cash out that we are going to take. And then what is the amount that we are going to deduct? Okay, we are going to deduct with this value. Cumulative cost with this value. Are we getting the right answer? Okay, this value, because it is the previous cash, the previous month cash out. That should be the way. Okay, and so we get 740. For the March here, how do we get this value? So remember, this is cash out minus cash in. Cash in previous month is this. So we should get this one. So this is the way. And then 39, we deduct with this thing, this amount, we should get this one. And this amount, you should deduct with this thing, we should get this amount. This amount, we should deduct with this thing, we get this amount. And similarly, we do that thing for the rest. So we get all those amount. Okay. All right then. Okay, so it looks like from this equation, it looks like there is a maximum amount. Okay, the maximum amount from the question there asking you what could be the maximum cash required. It looks like 2910, which is coming from here, this one, and it is happening at the end of August. Okay, at the end of August. See, you can get the two answer once you get the right what we call answer there. Okay, and then lastly, last question. What is the expected monthly payment received or of work that is scheduled to be completed in the month of 9 or September? Let's say September. This is what we call monthly. This is not the cumulative. Huh? So the rest of this is what we call cumulative. This one is also cumulative. But when you are dealing with the last question here, it is monthly on the month of September. Okay, now let's take a look at monthly receive. Cumulative monthly receive is this what we call this row. You must focus on this row. On September, okay, September work. Okay, actually September work, you claim this is the first month, second, third, fourth, fifth, sixth, seven, eight, 9. Okay, the 9 month here, September. Okay, actually it is going to be paid here. This one is going to be paid here after we already deducting with what we call retention money, and then this amount, So 470 is the payment, the monthly payment for September. But we are going to receive in October because whatever work that we did on September, we are going to get on October. So that is what the question is all about. Okay. So that is example. All right. So the rest of the example is basically similar example, except that some of the things are being shown in different values. Another example basically also different values. Some do have advance payment, some don't. So the concept is almost the same. So you can go back and basically read the example. Okay. So any question? Next meeting would be, I think, on January. So we have a big gap from now until January. I think 2 more months, if I'm not mistaken. Is it now? Is November?
15 January next class.
That will be 2 months from now, isn't it?
12, yeah.
Yeah, it's a long way to go. Okay, that's good. So next meeting, meaning to say our last meeting, we are going to have another quiz or test, even though I do not want to call it a test. From our course information, we claim as test. So we can use the word test for the sake of administration purposes, okay? So today we are going to have either quiz or test, is the concept that we use based on the first class. So the next, the third meeting, which is the last meeting, we are going to have another test, okay, test number 2, which is going to be to evaluate you based on your knowledge on today and yesterday class, okay? So meaning to say, after this, I'm going to release quiz or test number 1, and then next meeting, another test number 2, and then also I'm going to release the Microsoft project exercise. So all of them will basically worth maybe around 30%. So today quiz or test would be 10%, another test would be another 10%, and then Microsoft project would be 10%. And then I will give you assignment later on. Try to give you as soon as possible so that you have plenty of time to work on. The assignment I will give you based on the previous exam question. Jaya did ask me about the previous exam question. So that question will be part of your assignment anyway. But I can only give you based on the exam that I handle, because I just handled this subject for the past 1.5 years, because last semester we do not have any final exam. During the COVID, we can replace that with the assignment, but for this semester, we was informed by faculty that we need to conduct the final exam. So the previous final exam was handled by a different lecturer. So that's why I do not want to share those final exam, because you might get confused, because the way that they teach you, because the way they cover, if you do that final exam, that will not be equivalent to what we are covering. So just focus on what we basically cover. Okay, that is the things. All right. Okay, so any questions so far with regard to this topic?
So I just want to clarify regarding during our registration in our calendar is mentioned that the exam will be by online.